The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. As major sports leagues and teams explore alternative financing options, sports investing has emerged as a fast-growing investment avenue. Recent high-profile transactions by prominent family offices have further accelerated interest in this space, positioning sports as a compelling alternative asset class for ultra-high net worth individuals seeking portfolio diversification and long-term value. And to address this growing demand, Standard Chartered has announced the launch of a new alternative fund focused on sports for ultra-high net worth and high net worth clients under its global private bank. So to find out more, joining me now is Sumeet, Bhambri, who is the global head of advisory and managed investments of wealth solutions at Standard Chartered. Hi, Sumeet. Welcome to the show.
Thank you. Thank you for having me.
Thank you so much for joining us. Okay, Sumeet, what makes sports an attractive investment class today? Are investors increasingly viewing sports as a stable revenue-generating asset class?
Yeah, absolutely. Sports have really become an attractive investment class for various reasons, right? Firstly, the returns have been quite attractive. They've been cycle-tested, and sports have shown consistent growth rates over the last decade, often outperforming even traditional asset classes. So if I give you some example, right? So some of the team valuations in the US leagues have grown by 10% per annum annualized since 2015. So that's like a 10-year track record. Second, sports investing has a very low correlation with traditional investment classes. Revenues from sports have generally been bolstered by emergence of streaming platforms, lucrative TV rights, and these generally have long-term multi-year contracts which provide predictable cash flows that are not very massively impacted by macroeconomic conditions, making this a very stable revenue-generating asset. Third, the opportunity set is also increasing quite rapidly, driven by the increasing demand for content, especially unscripted content. And this is creating very engaging investment opportunities. People are recognizing the value and what it does for audience engagement. And finally, I think the point is that the addressable market for sports investing is quite substantial. Beyond direct investments in buying teams and leagues, there are significant adjacent deal opportunities. The estimated market size for global professional sports franchises stands at about 2.5 to 3 trillion. And if you look at the broader sports, media, and entertainment ecosystem, the total addressable market is estimated to be 7 to 10 trillion.
Oh, wow.
So clearly, the scale is there, the size is there, it's uncorrelated, and that's what makes it super exciting.
Definitely. Well, then, Sumeet, what kinds of, investors are entering the sports investment space, and what are they really looking for?
I think there are broadly two types of investors that we see, each bringing their own perspectives and objectives here. The first group comprises investors who are passionate about sports and are interested to get exposure to the teams and leagues, sort of like trophy assets to add to their portfolio.
Right.
The second group are investors who appreciate the financial benefits of investing into sports. They're looking for diversification, they're looking for returns with low correlation, and an asset class that has some kind of insulation against broader market volatility. And these investors are, over time, gaining conviction in the fundamental growth case of sports investing, including focusing on opportunities with, as I said earlier, long-term, non-cyclical, recurring revenues. So those are the kind of investors that we are seeing.
Then why are ultra-high net worth individuals and family offices, particularly drawn to sports-related assets? How are these individuals, responding to sports as an asset class compared to more traditional alternatives like real estate or private equity?
Yeah, so we're seeing a huge amount of interest from our ultra-high net worth individuals and family offices for sports-related assets, and it's easy to see why. So major sports leagues across the world are signing record-breaking broadcasting deals, and broadcasters are paying top dollars for sports content. So a good example of this is the NBA's 2024 media deals, which total about $76 billion for the next 11 years. Correct? In fact, signed media deals are now worth $110 billion for contracts running from 2022 to 2033. Now, this growth has created real opportunities for private investors. More sports franchises are now open to private equity participation, allowing investors to gain direct exposure to this dynamic space. And it's not just about the teams themselves. Apart from over 540 billion addressable market opportunity within the major leagues globally, we are seeing strong momentum in adjacent subsectors, which represent an additional 300 billion in market opportunities. So all of this is creating a very compelling entry point for long-term capital into this space.
Okay. So what are some factors then that drive the growth of sports investments investors should be looking out for?
So there are several factors, right? So that contribute to the growth of sports as an investment theme. First, as I said earlier, sports teams benefit from highly diverse and recurring revenue streams, many of which are not even just dependent on game day attendance. Investors can now tap into revenue streams coming from media rights, sponsorships, licensing, merchandising, thereby creating a more stable income base. The franchises themselves are also becoming more profitable, and they are a lot more sophisticated operationally, which in turn drives up valuations. Stadiums and leagues are now run with the kind of efficiency and structure that you'd expect them to have in more mature industries. On top of that, the rise of streaming platforms is transforming how fans consume some of this sports content. This shift is creating new commercial models and extending the reach of franchises far beyond traditional markets. And I think I want to come back to the point on non-scripted entertainment. Sports offer real-time drama, cultural relevance, and global appeal, making it incredibly valuable, not just as a business, but as a media property. And these are the kind of long-term tailwinds that sophisticated investors want to position themselves for.
Well, to address this demand for sports investments, Standard Chartered has recently announced the launch of a new alternative fund focused on sports for ultra-high net worth and high net worth clients under its global private bank. So, Sumeet, what was the driving force behind launching a sports-focused alternative fund at this point in time?
The idea really stemmed from a shift in investor behavior. There's been an increasing demand from sophisticated investors to access investment opportunities in sports teams and franchises. These were opportunities that were historically difficult to get into unless you had specific networks or industry ties. But now the landscape is changing. Today, momentum around sports investing continues to grow, and private capital is becoming an increasingly crucial part of financing these sports leagues. Now, if you're able to access the theme through established GPs, it becomes an easy way for our clients to gain access to these sports franchises. And based on client feedback, we felt it's the right moment to provide a dedicated, structured entry point for clients seeking exposure to this high-growth area.
Then tell us more about this new alternative fund. How does it work, and what are the types of assets or investments the fund will target?
So this is a semi-liquid or evergreen strategy, as we call it, designed to offer access to sports, media, and entertainment investment opportunities. This fund offers access to investments across the capital structure, so common equity, junior debt, senior debt, and preferred equity. And it looks for a wider opportunity set with the ability to seek out best relative value opportunities. Beyond just leagues and teams, areas such as equipment, youth sports, venue operations, ticketing platforms, and music, all of these put together hold a potential value of over 300 billion in terms of the market and offer diverse investment opportunities within the ecosystem. And that's what this fund is able to access.
Very interesting. Well, then how is this fund capitalizing on current trends in, the sports, media, and entertainment sectors?
So private capital is becoming an increasingly crucial part of financing sports leagues. So we've selected a partner with a strong reputation and established incumbency in the space, positioning them as a formidable competitor capable of winning deals at attractive terms in a significantly undercapitalized market. For example, globally, only 4 private equity groups have been pre-approved by the NFL, the National Football League, to acquire stakes in teams, and our partner is one of them.
All right. Well, then how does the risk-adjusted return compare to other alternatives like private equity or private credit?
So if you look at the historical trends, sports leagues in the U.S. have been able to improve overall returns and reduce volatility in the portfolio. Returns from some of the U.S. sports franchises are obviously less volatile compared to traditional asset classes such as global equities, bonds, and private debt. This is obviously due to the stable nature of sports revenue streams and multi-year locked-in revenue sharing system that is common in all the US leagues such as the NFL, NBA, MLB, and so on and so forth. The correlation for these asset classes is also quite low compared to traditional assets, under 0.5, which makes it quite attractive.
And finally, before we let you go here, Sumeet, do you see sports continuing to grow as a major alternative asset class over the next 5 to 10 years?
Absolutely. Major sports franchises have remained resilient and less correlated to the broader market. Team valuations in major sports leagues have grown by over 10% per annum since 2015. Enterprise value in U.S. sports has demonstrated consistent growth over the past decade and will continue to do so. And we believe that sports assets will continue to outperform traditional asset classes with less volatility. They have been supported by scarcity value. For example, there are only 32 teams in the NFL, as well as the demand driven by unscripted content that has consistently driven up the value of underlying media and broadcasting rights. When looking across all global sports, media, and entertainment opportunities, like I said earlier, the addressable market is estimated to be 2.5 to 3 trillion. So a very exciting time ahead for sports investing.
Definitely is. Well, thank you so much, Sumeet, for joining me today.
Thank you. Thanks for inviting me.
Thank you. That was Sumeet Bhambri, who is the Global Head of Advisory and Managed Investments of Wealth Solutions at Standard Chartered. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.